Hi, my name is Michael Waitze, and welcome back to ATP. Financial innovation is never the sole result of a single breakthrough. I think, right? It emerges from the collision of technologies, markets, and ideas moving together. Artificial intelligence, blockchain, and DeFi are clashing with traditional financial systems in ways that could fundamentally re-architect global finance and the global economy. This episode of ATP wants to ask, is this convergence of AI, blockchain, and traditional finance driving evolution or revolution, and a complete redesign of the financial system? What does success in this new digital economy really mean at the organizational and ecosystem levels? And how do record-breaking ETF levels signal the next stage of crypto's mainstream adoption? Karl Mohan, EVP Financial Services and GM International at Crypto.com, joins ATP to explore these topics and more, and what they reveal about the future of money, commerce, and markets. Karl, thank you so much for coming back to the show. It's great to have you back on again. How are you?
I'm very good. Thank you, Michael. And thank you very much for having me back on your show.
Oh, it's my complete pleasure. I told you when we recorded the last time we wanted to have you back on. I meant it. Okay. Let's start with something big. As AI, blockchain, and traditional finance, and I don't know, is it continuing to converge? I'll leave that up to you. How should we think about the future of global finance? Is it an incremental evolution or a complete re-architecturing of the financial system? What do you think?
Oh, Michael, I think this is a very good question. 5 years ago, if someone mentioned AI, we were still talking about it from a very rudimentary perspective. 5 years in, we have, ChatGPT, Gemini, and it's a global race towards adoption, right? I sense the same things happening in the financial infrastructure world, right? It's not, look, it's going to be a complete re-architecture in my view. And again, Michael, I'm going to push boundaries today. There are going to be listeners to your podcast that might be calling and saying it's absolute gobbledygook, but this is my views, and I'm going to just share it, right? So my views, I think it's going to be a complete re-architecture of the system whilst being disguised as an incremental evolution. Now, what I mean by this is, you have traditional finance institutions incrementally adopting these technologies. You've seen them adopting AI for some of their backroom functions and all of that. But there's an underlying shift that is fundamentally rebuilding the entire financial stack from the ground up.
Yeah, sorry, go ahead.
Keep going. No, the two key areas that I think or at least I am a strong believer in, that is revolutionizing the financial world, is two parts, right? So the first one is asset tokenization, and the other is AI agents.
Okay, go ahead.
Sure. All right. So first one, asset tokenization. And we've heard a lot about it. We've seen a lot of, comments about real world asset tokenization. Now, these are basically, representation of real world assets like real estate, bonds on the blockchain. Now, this isn't just a trend. I think it's a complete reimagination of ownership and liquidity, right? Standard Chartered and Sinpulse last year released a report. If I can remember the stats correctly, I think it was about $30 trillion estimated to be put on chain by 2034. Now that's huge numbers there, Michael. And this is definitely going to make massive changes in terms of how we interact with the world and the economy that we know it. The second, I think, is AI agents. Now, we've heard a lot about AI. Everyone uses, either some form of AI today, whether it's ChatGPT or Gemini or Grok. But I think what we're not seeing is the emergence of AI agents. Now, what are these? These are basically autonomous, tiny little programs that can interact with the blockchain protocols today, right? They can manage anything from crypto investments, execute trades, and even make decisions on decentralized autonomous organization, or the DAO, which is what governs most blockchains, without human interventions. Now, for example, right? If you have a bank's back office, currently they're all managed through ledgers and a whole bunch of humans reconciling and managing these ledgers. An AI agent can execute smart contracts, and we'll talk more about it later on, to perform tasks like loan originations, collateral management, and all of these actions can be transparently recorded on chain for future audits. Now, that's where I think the future is. It's complete revolution, and that speed of change is going to be so fast that from this slow evolution that a lot of financial institutions are taking today, it's going to be a sudden change in the near future.
So I want to make an analogy for you. So just work with me on this if you don't mind, right?
Sure.
When I first joined Morgan Stanley a while ago, right, there was no electronic trading. And I want to come down on your side on this actually, right? Because I think at some level, revolution never happens overnight. But there was this and I'm not talking, and there's this famous phrase that goes something like this about bankruptcy. Bankruptcy happens really slow and then immediately. And then immediately you're just like, whoa, I have nothing. But I think the flip side of that is the same, right? I think innovation is kind of the same way, where it's super incremental and then it's just there. But I want to ask you this. When I was at Morgan Stanley and Goldman Sachs, we were like deeply, for lack of a better term, we were embedded in the financial world. And all we did all day from morning to noon and then at the bar afterwards was just talk about all the little incremental things that were taking place in the finance world. But when it filtered out into the real world, people were just like, what is this electronic trading thing? Why am I now trading in decimal points and not in eighths and 12ths and 16ths and 24ths and stuff like that? What is because I don't disagree with you. I'm not as deep into the crypto world as you are, but like there are, and I want to follow up on this in a second too, but there are people out there that have no idea about even these incremental changes. What are they getting wrong and what are they not paying attention to that they should do? And why is it so important for people that aren't so ensconced in this world to know? And what do they need to do to get this right? Do you know what I mean? Because like you wake up every day and have these conversations, but like your neighbor who could potentially be a lawyer or a doctor might have no idea.
Yeah, look, I think there's fundamentally certain things that are happening, right? So a doctor, until his, trading platform adapts it and then suddenly pushes out the change. A good example I can think of is digital banking. Yeah. No one walks into a branch today unless you're my dad, right? he still walks into a branch.
He wants to walk into the branch though.
Exactly. Have a conversation with the teller, tells the teller all about his day, and then get his passbook, updated, right? That still happens. True story. For most people, the average person, that change is going to happen to them, right? That's given in anything that we do, and then they're forced to adapt that change. But I'd like to think about it in the context of financial institutions, right? Because those are the organizations that I interact with all the time. Now, most of them, and this is, I'm going to quote, it's not my thinking, but, Daniel Kahneman's analysis of behavioral economics, right? This whole concept of anchoring bias, right? So you have every one of us have this bias in us. We anchor against, past experiences, right? And if they're generally positive, then that bias becomes stronger. Or if it's negative, again, strong biases, right? Now, if you go and talk to most bankers, they'd go, oh, but the system's working. You have digital banking today. You can move monies across borders real fast, right? But they're not thinking from a perspective of, wait a minute, what if this is a clean slate? How would I design a financial system based on a clean slate?
It's a great question. Go ahead.
If you take that approach, this is a clean slate and I'm redesigning from the ground up, you would build with two things in mind today, right? So the first one is, and again, I'm also biased in this instance because I'm interacting with these solutions on my day-to-day life. The first one is AI, right? So I know we talk about it in a very cursory level. Everyone knows what AI is. Like, my mom knows what Facebook is today, but do you really understand what it means and, the requirements and how you interact with it? She might not know, but she understands it on a very cursory level. But when we talk about AI, the part that I am most excited about, which is the clean slate part, right? AI agents. And we talk about this from a perspective of, let's say you are moving money from point A to point B. Today, every movement requires some form of human interaction. You go and talk to any corporate treasurer or CFO in any organization, there are multiple decisions. And some of them are very rudimentary, like move money from this account to another account on a daily basis. So we balance our accounts, right? Now, a lot of these tasks can be automated. And when I talk about automation, it's not like, the standard automation that most banks would have today, which is let's sweep money, which is a fixed amount at a fixed time from one account to another, right? These are autonomous decision making machines that can decide whether to move money or not, when to move that money, and how much to move those monies to, right? So that's the first. The second, and I think I touched this earlier, and I talk about tokenization of assets,
Yep.
right?
Because I want to
So
talk about it too.
when
Go ahead.
because when you tokenize money, now the machines can take over that access and actually rebalance your entire financial portfolio in an instant, right? So speed and the ability to interact is, if you ask me, blockchain was brilliant back then, and it ran independently. The crypto bros and the crypto fanatics viewed it as a change with humans in mind. But when you layer that with machines, the blockchain is clearly built for a machine to be able to read, write, and understand transactions.
So can we talk about the bigger implications? I put my cards down, right, because I have some things that I want to ask you, but this is
Sure.
actually too interesting to let just go by, right? And here's the thing. And you can see me like looking up and thinking, I always want to know what the second order and the third order implications of these, right? So it's nice to say that like agentic AI is going to automate this process or that process. But let's
Yeah.
back up and say like what we have today, and then let's try to understand what the significance of this changes, right? So what we have today is if my friend moves money for me from New York to Bangkok on a Thursday night, I don't get it until Monday morning
Yeah.
because there are a bunch of, like you said, individual steps that take place because that money's not digitalized. It's not tokenized at all. It's really just like it's an entry into a ledger that's been around for 25 or 30 years, right? Through very specific, it's probably going through Swift or some other money payment system, yeah? But if it's, and it takes time. But during that time, right, the bank actually earns a VIG on it. So in other words, they want it. I'm just being honest, right? Like they want it to sit in their account before it gets to my account because for every day that it doesn't get to me, they earn overnight rates, whatever those overnight rates are. And that's great, right? But the second thing is they're literally making a one-off transaction to me and none of the other transactions that are happening at the same time know about my transaction, right? Because the person who's in charge of it, right? So this is really important to note because when you get AI and artificial intelligence involved in agentic AI in this case, but also the money is tokenized. Now every part of that system knows every other transaction that's going to happen on an anonymized basis. They don't know it's me and it's you and it's Renat. They don't know any of that. So now everything can become, like the first order is everything can become way more efficient because instead of batch processing on a Friday at 3 o'clock in the afternoon,
Yeah.
right, it can actually look and say, when is the most efficient time, including foreign exchange risk, right? Because if I'm taking dollars and turning it into Thai baht or taking dollars and turning it into Japanese yen or whatever it is, and even if I'm selling bonds and buying stocks, we can talk about that too. All of this stuff now is known to the overall system. So the ability for it to optimize from a banking perspective is insanely great. But also if individuals, because technology gets democratized, have access to those tools, they can also do that management on their own portfolios. Am I making sense? Does that make sense to you?
No, it makes sense. Michael, if you don't mind, let's explore this a little bit more.
Please go deeper. Yeah, for sure.
So I think the thinking required. Let's go with thinking first, right? Let's understand the building blocks of today's financial system, right? And if you understand the building blocks, then you can see where the challenges are and how to process it or how to improve it, right? So if we go back to the building blocks and the original bank, and this is going back to history, back to the Medici's, right? Who first allowed cross-border banking, right? So prior to that, you need to carry cash across borders and all of that. And Medici's, that was their innovation, right? And they did this through, you know, interbank ledger system, right? So this whole concept of nostro vostro, and most financial service bankers would know about it. That whole Latin word is still used to today
It is.
to,
It is.
for banks to recognize who owes who what, right? And this whole concept of my account and your account and all of that. So the reason it takes 3 to 4 days, besides the processing requirement, is because there's a whole bunch of counterparty risk between the hops the money has to take, right? So depending on who's got which account with which bank to get to its final destination, which is your bank account in Thailand, right? So you want Thai baht. So the first hurdle is currency conversion. Your mate's US bank would have taken its clip, and then they start remitting, right? Across the hops, there are multiple intermediaries because there is no direct link unless you are a multi-billionaire and you're banking with a bank like Citi or JPM who have got branches globally. Then that's a different story,
Yeah,
right?
I'm not a billionaire yet, but I'm working on it. But please go ahead.
Fantastic, fantastic. Not financial advice, but Bitcoin is definitely the way to go. Just
I
joking.
don't disagree with you, but anyway, no financial advice from me either. Go ahead.
So you look at that building block and you go, hey, wait a minute. In a blockchain transaction, if I can see what someone's value or how much they're holding,
Yeah.
then I'd be able to understand the counterparty risk immediately. So your mate sending you funds, you could literally go to the blockchain and check it out and say, oh, Bob's got the 100 grand that he needs to pay me, right? Now, on Bob's end, he knows I can send you that 100 grand and it will reach you because the blockchain is immutable. So once it's confirmed, he knows that you, Michael, have got his money and he can prove it to you on the blockchain as well. Now, it completely removes all of these intermediary requirements, right? So that is the first, it's like one of the shows that I like. I'm digressing slightly, but just bear with me. One of the shows that I absolutely love watching, and if you haven't, I would encourage it. It's a documentary called Big, Bigger, and Biggest, right? So they take these biggest structures like, the Burj Khalifa or a bridge or, a cruise liner or a nuclear sub, and they will try to figure out what were the innovations that led to this ultimate creation, which is highly complex in design, right? So if you think back about this evolutionary step, which is why I'm saying it's evolutionary until, like, I think you agree with me, it becomes revolutionary, is this gradual steps that are taking place. So the first step is, how do we solve for this transparency and the ability for people to know who owes, not only owes, because it's not credit that's moving, it's actual value. I can actually determine that day one. And then you can layer that. And this is where I think you're getting at, with an AI agent that can pick the time of that movement. Number two, the perfect currency rate. So it can do some form of predictive analytics and say, actually, Bob, if you want to send Thai bahts to Michael, don't send it tomorrow. Perhaps send it after the announcement of, the Feds or some form of interest rate movement, so that you can optimize that value.
Yeah. So again, you bring up a really good point, and I have a real life example of this. A few weeks ago, I started getting worried about the dollar. It may have been more than a few weeks ago, and I started thinking, okay, I earn most of my income in dollars, and it sits in a bank account in New York.
Yeah.
But I sometimes transfer money to me here, but I also transfer money to Japan for my family. What should I do? Because I don't want to sit there, and believe me, I lived when I worked at Goldman Sachs in Tokyo, I got paid in dollars and I lived in yen. So I understand every day, like, what that FX risk looks like, right? But again, I'm making a decision as a human. I'd love for the agentic AI to be able to say, don't do it today, and here's why. Here are 7 things that are coming up, whether it's the passing of the Genius Act or the Stablecoin Act or
Yeah,
any of these other things that are
yeah,
taking place that I don't know exactly when they're happening, or it could happen when I'm sleeping, right? And that this big bank is planning on doing this other thing. Wait until then, and then optimize for this number of money to this place and to that place, because that's going to be, at least in my predictive analysis world, the best time to do that, right?
100%,
Yeah. Does that make
100%,
sense?
Michael. No, it makes perfect sense, right? So, I think for most people, right, these are decisions that theoretically they're not trained to make.
No.
Theoretically, for most
No.
people,
Yeah,
right?
for most people, no way.
Now, you and I, we've worked in the financial services industry. We understand, currency risk. We know the drivers of currency risk, and therefore we are able to make those decisions, right? Now, for the average person, they're making these decisions based on what their mate tells them, what they're trying to assess. Maybe they wait for a few days. What if that process can be automated for them? Now, that'll be a very powerful tool, especially, right, if you think about it, maybe for you and I, a few bips here and there would not make a difference, right? But if you are, remitting funds, let's say, for most, you know, support workers, right, in markets, whether it's from Philippines, Bangladesh, Pakistan, or other markets, there's this material difference to their families, right? Which is why I feel that a lot of this innovation, whilst may not be as impactful today to the developed markets, they're going to take root in the developing markets where the demand is highest for a number of factors.
Right. So look, we exist in Southeast Asia. I've been in Thailand for, God, almost 14 or 15 years now. It's shocking to me, but I've been in Asia itself for 35. I forget exactly how long you've been in Singapore, but we exist in these markets, and you're right. If you think about, and I'm rounding, right, there are 18,000 islands in Indonesia. But on a lot of those islands, there are, men and women running SMEs, and sometimes they're importing materials from Thailand. Sometimes, you're right, they're importing them from the Philippines. But because cell coverage is still not 5G there, and I know this from doing a bunch of other shows, that sometimes the information that they get is not in real time. So you're right, a few basis point movements in even just prices of things, but definitely in the exchange rates, could be a massive hit to their family.
Correct.
It could work both ways, but you don't want to be in a position where you're making a bet that you don't know you're making.
Correct.
But in
Correct.
some cases, agentic AI can actually help them by alerting them, at least, that like all these things or all these decisions are going to get made, and here's the potential impact on this input that you get from the Philippines. At least make a decision about it.
That's right.
Yeah,
Spot on.
is
Spot
that
on.
fair?
That is perfectly fair. Michael, before you achieve and reach out to your card, I just want to add something else, right? Why I am totally passionate about the change that is coming, or the wave, right? This new wave. The, you know, I think in 2021, and I can't remember, and apologies for my memory failing me, but I think it was the United Nations, Development Program identified 1.4 billion people that are unbanked. Now, don't quote me, my source might be wrong, but I know it's roughly about 1.4 billion.
Let's just say it's a big number without calling you on the
Very
exact
big
size. But
number,
yeah, you're
right?
right. I don't know the exact number either, but it's a big number of unbanked people. Go ahead.
Now, the interesting thing is most of these unbanked people cannot get banked because they do not have access to bank branches generally, right? So the ability to be able to deposit money and all of that. And quite a number of them rely on remittances from their family members, either working in cities or outside of their country
Right.
to help support their family, right? Now, this is where I think stablecoins is a great innovation. They started off in the crypto industry, right, as a trading product to facilitate trading, but that is quickly moving into remittances, not in the sense that most of us would think about, where you can access general banking services. Most people will still continue using that. But for those that do not have banking services, increasingly so, I think the likes of, Western Union and all of these remitters that were built around being able to send funds to people who don't have bank accounts, that's going to be a massive change.
So I want to point out one more thing as well. I don't disagree with you either, but I want to go one step further. Again, from a lot of the recordings that I've done over the past 3 to 5 to 7 years, there were entire businesses built on, I know I can get money from Dubai to Manila,
Yeah.
but once I get to Manila, to get it to somebody in the provinces in the Philippines, and it's not just the Philippines, right? It could be true in Thailand, it could be true in Vietnam, it could be true in a bunch of different places, Indonesia as well. It was more manual. Like you literally had some people who were selling batteries, selling Coca-Cola, whatever, they would get the money there. But since nobody else in the town or the village had access to that technology, they would literally pay out remittance to them, take a little bit of VIG for themselves. And that was the last mile of this. But what you're suggesting is that that's going to change too. So even those businesses which are relatively new, like Western Union is 150, 200 years old, they're going to have their own problems. But even these new businesses that got built could have issues as well, because once the connectivity gets even remotely or slightly better, no pun intended on the remote part, by the way, they can have a digital wallet connected to the internet, and then that whole last mile is now global. And you're right. At the beginning, it was just like, where can I put my Bitcoin? And there are no services associated with it. But 5, 6, 7 years in, we're now saying, well, now you can get a stable coin. And that can be a representation of another currency. And then around that, you can get banking services that don't require you ever to go to a bank branch. And by the time the next generation comes around, they'd be like a bank branch. It's almost as quaint as a Model T, right? It's like same thing, yeah? But can I ask you this? You mentioned earlier, and this is not on the cards either, I should just throw these things away. But you mentioned earlier this idea of literally like disintermediating banks, right? This idea of that the middleman no longer is going to become necessary. But then what is that second and third order implication for some of the biggest banks in the world? How do they contend with, or how do they catch up with? Because right now, these big institutions are buying a ton of Bitcoin, right? And if you believe, because even if Bitcoin, and you can argue with me about this, right? But even if Bitcoin has no transactional value, right? I'm a believer, at least today, that no one's going to take a Bitcoin and buy a pizza again, even though people were doing that 15 years ago, whatever it was, right? But that it's the underlying value holder of all cryptocurrencies, so you won't spend it, but you'll value other things based on it. In other words, it's almost like the treasury bonds and corporate bonds. What's the spread, in a way, right?
Correct.
So what's the implication for big banks here in your mind? And then there are more questions too, but just I'm curious what you think, because you're in it every day.
Oh, that's a really good question, Michael. Some of it might be a bit controversial, so I think that's why. I mean, you've had me before. I'll speak my mind.
Go for it. Because I'm genuinely curious. You know me as well, right? Like, I don't ask a question and hope for some milquetoast answer.
Yeah.
I want to know your real opinion. That's why I'm asking, because you know better than I do in this case.
So look, I think the banks in general, right? And this is going to take time because there are a lot of entrenched business processes, trade financing processes and all of that. But that aside, right? Now, I think where the banks that are going to win, right? Let me think about who's going to win, and then therefore automatically those not thinking that way going to be losers, right?
Right.
So if we go down this path, which I strongly believe that real world asset tokenization is here, and it's going to revolutionize the way we interact with buying, selling, owning, whether it's property or gold or any other asset, then the question a lot of banks would have to have in their mind, especially in their trading desk, if I'm not the trusted intermediary to actually execute, what role do I play, right? Now, the biggest challenge in a lot of these markets, and, Michael, you've been in investment bank, you know that liquidity is always mode, right?
Yeah, it's always my question. Go ahead.
Can banks then evolve themselves to be on-chain liquidity providers for tokenized assets? Perhaps, right? They have large balance sheets today, and they can actually pick and choose which assets they're going to provide liquidity for and act as the counterparty, because you still need trust in the system, as well as, especially as you are evolving the system. The other is maybe, can they be, regulated gateways for institutional access to these assets? Because if you're an institution, you still might not go direct to a DeFi protocol, for example, and you'd want to have an intermediary, right? Now, I don't think it's just a simple matter of banks integrating new technology. I don't think
Go ahead, because I was just about to ask you this. Like, what
yeah.
is the thing that they need to do? Because, again, in the old days, 4 years ago, right, you had DeFi technology sitting over here, big banks
Correct.
sitting over here, and even the leaders of some of the biggest banks, right? Jamie Dimon was just going, whatever's happening over there is just like terrible stuff. Bitcoin's a scam and all this other stuff, until it wasn't, until he was like, we need to buy as much of this as we can. Do you know what I mean? So what do they have to do in your mind? And I want to give a historical reference because I just enjoyed doing this. And I was talking to somebody about this a couple of days ago. Kodak essentially invented the digital camera.
That's correct.
And I remember seeing, and I think I even bought a really poor initial version of a Kodak digital camera, but they didn't commit to it because they thought it's going to cannibalize our film business. And I was asking my buddy a couple of days ago, when was the last time you saw Kodak film, and when was the last time you saw a Kodak camera? It was never.
Never.
It was never, right? So there is big risk in these big banks not doing anything, right? So how do they integrate this DeFi technology? Because it's not just like plugging into that and now you're done. Yeah. What is that process that needs to happen? And it's not on the cards either, by the way.
No.
I blame you for that in a good way.
Michael, I think the technology side, right? A lot of us focus on the tech, and I think that's where the original. Let's go back 2020, 21. Even if you go back to the Bitcoin genesis, right, was to disrupt banking through the tech. It hasn't held up to it because the tech itself, it's great, but it's like, no one talks about the tech in a mobile phone today.
No, same thing. Go ahead.
Same thing, right? So, when we first started with mobile phones, it was about the tech, like even laptops, we used to talk, I had this Intel chip and this much RAM, this much.
Yeah, I just got a Pentium. People would say, like, who cares? Nobody cares.
Who cares?
Yeah.
Nobody cares these days. I don't even know what system my laptop's running because we have moved towards utility, right? And that evolution's taken place now. So, you start back in the evolution of blockchain was all about the tech, immutability, and its trust and all, trust. And that's gone, right? Now, for the banks coming in, the one thing that they have is strength of balance sheet. We talked about moat in liquidity, right? They have that. The game here is how can they provide liquidity on chain? Because that's where the transactions are going to be. How can they provide liquidity on chain? Now, as you see, whether it's tokenized bonds, tokenized treasuries, as they get tokenized and start interacting on the blockchain, the banks play a strong role in lending their balance sheet to that liquidity. I think that's the game plan for them. If I was sitting in some committee somewhere, that would be the idea that I would propose, because the tech itself, there's no value in the technology. I think that's definitely the case. Now, the part that I would be worried about if I was a bank, especially second, third tier banks, right, is would I get disenfranchised with stablecoins, especially when it comes to savings, lending, and all of that, as these processes get automated. I mean, all it takes is some fintech person to come in and say, hey, guess what? We can actually store stable coins and lend out in stable coins, right? Today, it's regulated under crypto licensing with some credit lane. I'm not calling myself a bank, so I don't have to have capital ratios, but that might change. But that innovation is going to definitely impact second, third tier banks. First tier banks, balance sheet big enough, they can last.
But can I ask you this? I'm always trying to figure out like what the next thing is, right? And I don't disagree with you. And I think that in the short term and even in the medium term, what you're saying is probably right. But you mentioned earlier, and let's just use your number, 1.4 billion people are unbanked.
Yeah.
Let's say they never actually get banked in a traditional way. right? But let's just say that the access to capital that 1.4 billion people gets allows them to, because if democratization of capital and capital movement is actually a good thing, theoretically it should make them a little bit wealthier, every day or every year. Then that becomes like a really large pool of assets at some point that could disintermediate the liquidity of the banks. And if you build a layer on top of that, right, that has stablecoin access, let's just say, because that's the tech we have today, or that's the product we have today, can that disintermediate the banks as well? I'm not saying it can, right? But I'm just trying to think about, like, if I owned a horse farm in 1915, I wasn't worried about some invention that was coming out of Detroit. People needed horses. Do you know what I mean? And by the time it was too late, I was like, nobody wants a horse anymore because everyone's driving a car. Now what do I do? Kind of thing, right? So I worked inside of a big bank, a couple of them, and really, really smart ones, right? And I know what the mindset is like. And I'm not saying it's complete short-termism, but the innovation that they did was mostly buying new things. Like even the automated trading that we did at Goldman Sachs was a company that we bought out of Chicago, right? So I'm just trying to think, like, what might it look like if all of these, and again, we said it right at the beginning of the show, if all these little innovations happen slowly, and then one day, boom, it happens fast, then what does it look like? And you may say, I don't know, because I don't know either. But that's the thing I like to think about, right? Because that's
Michael,
real disruption.
I'm going to throw a couple of controversial ideas. I've publicly talked about it on LinkedIn, so I am going to put it forward in here as well, right? So one of the researchers and authors that I really like is Clayton Christensen, actually. And back in, I think, early 2000s or late 90s, he wrote a book called Disruptive Innovation.
Yep,
right?
super famous book.
Brilliant, right?
Super famous book. Yeah, very famous book.
And that concept is happening before our very own eyes today, right? So, and what I mean by this is adoption of this low cost technology that is not innovative, not super sexy, that is taking place in the sidelines. So it happened in the crypto industry. I'm talking about stable coins here, right? Because that's going to be the major disruptor. Stable coins, crypto industry. It is now moving into, again, your JPM cities and your large banks may not worry about, because they're moving into third world countries remittance, right? So if you are, let's say, in Philippines, which is, their biggest export is remittance, inbound remittance from overseas. That's their major export.
And it's billions of dollars.
Correct, right?
Billions of dollars, yeah.
And Western Union built the entire business, US, Philippines, one of their most profitable corridors, right? If you are a Filipino in the US today, sending money back to your family in the Philippines, now I would choose, and it's just a matter of word of mouth, choose to send directly US dollars to my family. Now, over a period of time, what you would find is, if you are in a shop in some island in the Philippines, and you are, let's say, you're one of these parent, right, of a family member that sent you money. You go walk into a shop, it's all priced in Filipino pesos, and you go, I have dollars. I can guarantee you the shopkeeper is going to say, that's all right, I'll accept dollars.
Done, I'll take it. I'll
take
it. For sure.
You live in Thailand. I've been in Malaysia. I grew up in Malaysia. Anyone would take US dollars happily. Now, the conversion rate might not be great, but
you can still transact, though.
You can still transact, right? Now, what's going to happen is, and this is my fear, right, that a lot of these countries that do not have strong monetary and fiscal policy, you are going to get this gradual adoption of the US dollars. Now, when that happens, right, you have a systemic issue of banks no longer being able to provide, and then it cascades. We saw that in the global financial crisis, happened in Iceland, bank collapses, and next thing you know, there's repercussions. Same thing's going to happen. That's my fear, but I think there is a high probability that might occur.
So we're at a weird point in history right now, right, where people are worried, and I don't want to talk about politics with you because we could talk for hours about this, right? But we're at this weird point in history, right, where people are actually literally worried about the stability of the financial system in the United States, and yet, for a bunch of different reasons, right? And yet, most of the stable coins that are being created today are in dollars. And you're right. If you go into the Philippines today and probably even into some other countries, they're like, I'll take the dollars and I'll take the risk on what it's going to do for my currency. And what that's going to do actually is not going to get in the way of the hegemony of the US dollar. It's going to strengthen it. Right. So I was worried about short-term fluctuations in the dollar. But the more I think about it, the more long-term I'm thinking the dollar and not even with all else being equal, but you're right. The real risk is that it's going to become the global currency because the other currencies in the world haven't been able to do that. Not the yen, not the yuan, not the euro, right? It's just that's not happening. And all the stable coins, because of the innovation that happens in the US, are ending up as US dollar stable coins and making a stable coin, as you said before, technologically, not that hard to do.
Not at all. I mean, the Genius Act in the US is absolute genius. No pun intended. No pun intended. Because what it's doing is legitimizing the US dollar stable coin, but all those liquidity is going to sit in the US, which means that inbound capital for the US, right? I don't think the US dollar hegemony is going to decline. In fact, I think it's the converse. That's what's going to happen. Now, central banks, I think these stats, and this, again, is about 57% today, US dollars held or US treasuries, US denominated assets held by central banks globally is at its lowest, at 57%, right? But that reason for that is because I feel it'll decline more for central banks because the reason most central banks hold that asset is to create value for their local currency. But if half your population has the ability to directly hold US dollars.
Right. And you can't stop it or control. Yeah. Right, and that's where things get really weird because the central bank in the United States, again, with all the controversy around it, let's see how that plays out. Yeah. But the necessity for central banks in some, let's just say, less, what's the right word I want to use? Robust economies, right? Or could get run over.
Correct.
Yeah, it could get 100%. Run over. The Genius Act is a big deal. I'm not sure anybody's a real genius on this or not. I want to ask you one more thing because I just find it super interesting. When you first moved from the traditional finance world into the DeFi and the crypto world, you must have had friends and family who were like, Karl, what are you doing?
Well, not even my friends and family. My wife.
I wasn't gonna say your wife because it's none of my business. But I was just gonna say, because if you're a banker, you're probably married to a banker. Because where do you meet your family? You know what I mean? Like I know, my wife worked at Morgan Stanley. Like I get it.
Yeah.
But there must have been something where it was like, is this going to be okay? Kind of thing. How has the perception changed?
Every year until last year. Every year. I can tell you. Is this going to collapse? Are you sure this is not going to collapse? It's all, and then she'll send me articles that, whether it's Jamie Dimon or someone else or Warren Buffett, or Charlie Munger going, this is all rubbish. It's all vaporware. And, I keep telling her, no, it's not. Here's the reason and all of that, right? And last year, something clicked because of the ETFs. So my wife can understand the ETFs, right?
Easy to understand.
I'm sure.
Exchange traded funds. It's listed. It has an underlying thing that's associated with it. You can't have an ETF on the S&P 500, so you can't have the triple Qs unless you own the stocks that underlie that. You just can't do that. So it's the same thing for an ETF on Bitcoin or on Ethereum. Sorry, go ahead. Just for people that don't know.
And the scrutiny required to list an ETF.
Yeah, it's not trivial. It's not trivial.
It's not trivial, right? So suddenly it provided some degree of legitimacy to the entire conversation that we were having, because if an ETF is holding this, sure. And then, of course, this year, different narrative, banks are holding it, financial institutions are holding it. In fact, there is a large insurer in Australia that have come out and said that they own Bitcoin on their balance sheet and have been buying since 2021. Never communicated that prior, right? But this year, publicly came out saying it, right? Now, there is a reason why that changed, but we can talk about it. but that definitely helped the case. So now, seems like a good decision. And in fact, I've enjoyed myself joining crypto.com, and it's been an absolute pleasure, and a really, really enjoyable journey.
I'm going to say this again. Karl Mohan, EVP Financial Services and GM International at Crypto.com. Thank you so much for coming back to the show. And I will say it again, as I said last time, you've got to come back. Hopefully you enjoyed this as much as I did. I feel like taking these and like tossing them into the air because the only thing I needed was your name and your title for me to remember and say properly. Otherwise, this was awesome. Was that okay?
That was perfect, Michael.
Thank you so much.
Truly enjoyed it. I know from the last time as well, through our conversation, the questions kind of frame the direction you want to head.
Yeah.
And, you generally feel like having a conversation. And I hope lived up to the expectation.
Definitely. I mean, look, you're one of the people I know because you're deeply embedded in this ecosystem who has to have the answers to these things, right? Because you do it every single day. In other words, when I was at Morgan Stanley and Goldman Sachs, you could have asked me anything about the stock market, the bond market, or the FX market. And I needed to know that because I needed to talk to my customers about it. Otherwise, what was I doing? I wasn't doing my job. And I know, I've been accused of being too serious, but I feel like you're a serious person. And that's one of the reasons why I like to have you on the show, because you're considered enough, you're thinking enough all the time about this. And to get your perspective I think is really powerful, not just for me, but for the people that listen and watch this show. So thank you.
Michael, thank you so much. Thank you. I know there were some controversial views.
I love it.
Hopefully.
Thank you
again. My biggest fear till today, which I keep thinking about, is the takeover of domestic fiat currency with US dollars.
It's a worry. Yeah. It's a big worry.
With countries that are already struggling with tax collections, proper fiscal policy, and suddenly, you're not being able to collect that.
We're at a real tipping point.
It is. And then it is just going to cascade to the rest of the world, right? But maybe, there will be hopefully some innovation that is going to, positively impact and change the way we live our lives.
I'm an optimist.
Same.
Thanks.
Likewise.
Karl.